I'm JR from Inspire with JR, and today we're diving into the most effective investment strategies for 2025. We'll cover a variety of investment options, including stocks and cryptocurrency, with practical tips that will help you make informed decisions. Whether you're looking to diversify your portfolio or focus on high-growth opportunities, this guide will provide you with the tools to build wealth efficiently and sustainably. Let's get started. One of the most fundamental strategies for any investor is diversification. Essentially, this means not putting all your eggs in one basket. By spreading your investments across various sectors, industries, and asset classes, you can reduce risk and increase the chances of consistent returns. The idea is that when one area of the market underperforms, other sectors or assets may perform better, helping to balance out your overall portfolio. For example, if you have a portfolio that only contains technology stocks, your investments are highly susceptible to volatility in the tech sector. But if you also invest in sectors like healthcare, consumer goods, and energy, you're not as vulnerable to downturns in any single sector. If you had invested solely in tech stocks like Amazon or Apple over the past 5 years, you might have seen impressive returns. However, during market corrections, these stocks could face significant drops. If you also had investments in more stable sectors like utilities or consumer staples, they could have helped cushion the blow during market downturns. Next, let's talk about dollar cost averaging, DCA. This strategy involves investing a fixed amount of money at regular intervals, whether the market is up or down. It's one of the best ways to reduce the risk associated with market timing. Why is this important? Trying to predict the exact best time to buy stocks or crypto is incredibly difficult, even for the most experienced investors. With dollar cost averaging, you invest consistently, which means you end up purchasing more shares when prices are low and fewer shares when prices are high. Over time, this smooths out the purchase price and can lower your overall cost per share. Let's say you decide to invest $500 every month into an index fund, regardless of whether the market is in an uptrend or downtrend. Some months, the price of the fund will be higher, and other months, it will be lower. But over a year, this method helps avoid the risk of buying too high or selling too low, ensuring you're not making decisions based on short-term market movements. Another powerful investment strategy is focusing on high-growth tech stocks. While the stock market can be volatile, the tech sector has historically been one of the highest performing areas. Companies that are innovating in emerging fields like artificial intelligence, AI, biotechnology, or clean energy often have massive growth potential. The key to this strategy is doing thorough research and identifying companies with not only a promising technology, but also a strong management team and a solid business plan. By investing in high-growth tech stocks, you're putting your money into companies that could reshape industries and deliver exponential returns. Consider Tesla. When the company first started, many viewed it as a risky bet, but over time it became one of the most valuable companies in the world, largely due to its innovation in electric vehicles and sustainable energy. If you had invested in Tesla 10 years ago, your returns would have been astronomical. The key takeaway here is that tech stocks can sometimes be more volatile in the short term, but their long-term growth potential can be enormous. While high-growth stocks can be exciting, blue-chip stocks are an essential part of a well-rounded portfolio. These are large, established companies that have a long track record of stable earnings, reliable dividends, and a history of weathering economic downturns. Blue-chip stocks are generally considered safer investments because they are less volatile and tend to perform well over the long term. These stocks can be especially appealing to investors who are looking for stability and consistent income through dividends.